Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Friday afternoon, we have Mark Marex, Senior Specialist with Index Research and Development at Nasdaq Investment Intelligence, to discuss Nasdaq-100 performance. We're also going to take a deeper dive into the Nasdaq-100 Dorsey Wright index as well, which tracks the QQQA. Mark, it's great to see you. As always, welcome back to Trade Talks. Let's take a look at this week's index.
Sure. Great to be back with you, Jill. Yeah, as mentioned, I wanted to bring up this product that we actually launched earlier this year at Nasdaq, the NDXDWA index, the Nasdaq Dorsey Wright momentum index for the Nasdaq-100. An interesting product that looks at sort of the top 20% of the Nasdaq-100 companies in terms of their technical kind of momentum factor performance. And as you can see on this first chart, I'm going back in time here sort of to the lows market in March of 2020 and looking at some historical backtest data as well for this index, but pretty clear to see that it's been a winner so far in terms of kind of zeroing in on those names within the 100 that are really exhibiting that strong price momentum. Decent outperformance here versus the Nasdaq 100, almost 19 percentage points since that point in time. Also outperforming things like NDXE, which is the equal weight version of the Nasdaq 100, as well as NDXT, which is the tech only sector companies within the Nasdaq 100.
And if we take a look at your next chart here, when we look at the composition of the companies that are included in this, it really is a diverse mix of companies. You would think it would be technology, but it really is a number of sectors in there.
Yeah, so it's not, because the companies in here are equal weighted, and there's only about 20 or 21 of them at any point in time. You don't have as much of a concentration risk in technology, I would say. Nasdaq 100 tends to average, 55 to 60% in technology as a sector. And of course, because it's market cap weighted, you've got that big concentration happening at the top with those top 5 companies, even though they are capped. They still can get up to, around 40% of the index. You don't have that here. Weights top out at around 5%. You can see the biggest names here: Align Technology, Alphabet, Applied Materials, ASML, and Biogen. That's a nice mix of kind of healthcare and tech. Alphabet, the only one in the top 5 in the Nasdaq 100. That's Google, right? Everything else here is, equal weighted and has had pretty good price performance since the last rebalance. That's kind of why they're up towards the top of those weight thresholds, but not severely overweighted versus the rest of the index. You can see on the right-hand side of this chart, I've plotted out the year-to-date price performance of these 21 companies. Moderna, which was recently added to the index, you can see is blowing everyone away, up over 300% year-to-date. Not a big surprise there, considering just how effective their vaccine has proven to be against Delta, more effective than the Pfizer vaccine, more effective than pretty much anything else out there on the market, as well as this talk about boosters, right? People thinking they were going to get the 2 rounds of Moderna and then be done with it. Turns out a lot of us might be getting a third one. So that one kind of blowing the rest of the competition away. But really, if you look at the rest of them, they're all up year to date, at least a few percentage points. Very decent performance across this entire group.
All right, and to wrap up here, let's take a look at market cap composition.
Yeah, so this is an interesting one, because if you look at the 100 billion plus market cap bucket here versus the 10 to 50 billion bucket, when I covered this index a few months ago, these numbers were sort of reversed. The 10 to 50 billion, the smaller end of the market cap spectrum for the Nasdaq 100, was the biggest slice. And now you've got the larger caps coming back in and taking over the biggest weightings in this index. That's kind of telling you that some of that, cyclical reflation, reopening trade that happened in the first half of the year really has rotated over back into larger cap tech, which we've seen in recent months, with the Nasdaq 100 again overtaking things like the S&P 500 in terms of year-to-date performance. And then on the right-hand side, you can see that sector sector breakdown in terms of index weight, which I mentioned earlier, tech coming in a little bit lower than you would find in the Nasdaq-100, healthcare coming in much, much higher versus about 6 or 7% of the Nasdaq-100. So interesting changes when you apply that momentum filter to this, and that's why we think it's an interesting strategy. That fund tracking it is from ProShares. Ticker is QQQA. It was launched in May of this year, up to about 25 million in AUM. We would expect to see that continue to grow as more and more people become aware of this as another kind of tactical way to play the Nasdaq-100.
All right, Mark, appreciate the insight as always. Thanks for joining us. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.